and you do have precious metals that are seeing a massive sell-off. And I say massive because you've already seen the worst day since 1980 coming in for gold as well. For silver, the worst intraday record coming in for this particular metal. But let's also talk about the levels that you're looking at right now, because you're looking at gold extending losses, falling as much as 8%. Now, when you talk about silver, there's a double-digit loss that you're looking at there, as much as 14.6% in terms of the downtick there as well. And when you talk about some of the factors, some of yesterday's tailwinds are actually the headwinds right now. But first things first, let's talk about the CME margin hike that is actually causing a lot of volatility right now. You do have CME Group that has raised margins when it comes to COMEX, gold and silver futures. Traders are required to pump in more money essentially to hold existing positions. And that's something that you're looking at, adding to that little bit of volatility in an already historically volatile market. Now you're looking at de-dollarization. Like I said, it was a key tailwind previously. Right now, you've seen a reversal of that trade coming in. Investors are no longer tilting away from greenback. And there's also indications of a stronger greenback as well that are chipping away at gold's allure right now as we speak. Now, when you talk about the debasement trade, which is the number 3 factor right now, you do have concerns around Fed's independence fading in with Warsh's nomination as well. And, that's something that you're looking at as a factor. Lastly, when you talk about safe haven status, that is also under a little bit of a threat right now, because you do have wild swings to the tune of about trillions of dollars when it comes to gold, threatening safe haven appeals. So you do have wild swings, which are more than the entire market cap of Nvidia, of Microsoft, and you're seeing those in the market cap of gold as well. You do have heightened volatility, like I mentioned. So that's also something that is worrying even long-term investors. And you do have technical indicators as well pointing to RSI in the overbought zone. So you're looking at gold's RSI as well remaining above 80 in 2026. And, this is, of course, pointing towards an overbought zone. And we'll talk about all of the factors. You do have the entire backdrop where you did have momentum that was sustained. Right now, you're looking at a bunch of factors. And let's also take the conversation forward with Pratmesh Malia, Deputy Vice President, Research Commodities and Currencies, Angel One, joining us on the show this afternoon. Thank you so much for taking time out, and a very good afternoon.
Very good afternoon. Yes.
It is a very interesting day to be talking to you after that Friday that we saw coming in. It was quite the doomsday when it comes to metals, especially silver. Look at that 36% plunge that we saw coming in when it comes to the white metal. First things first, the question that perhaps is on the top of investors' mind right now is, do you think that this meltdown is likely to continue from here on? Are you looking at it as a right now phenomenon, or do you think that it was too fast and too quick for this particular rally that we saw coming in?
I think we have to understand the fact that no asset class can rise for infinity and fall for infinity. That's the first thing. The second thing is it's a combination of fundamental factors at play, wherein you rightly mentioned that nomination of new Fed chair and independence of central banks in question. That's the second part. Third part being dollar being consistently weak for most of the past year, and now it is rising because of the nomination of Fed chair. Has raised this particular question: where are precious metal prices headed? Third point is there is a disconnect between the paper as well as the physical market. In order to simplify this, just to give you an example, that US Mint has halted silver products sales and delivery, and there's a disconnect between the paper, which is the digital trade, as well as physical markets. And again, it is an overcrowded market. There was froth, overbought conditions prevailed. Forced liquidations have happened, because of which the entire scenario of consistently falling gold and silver prices for the past 3 days or so has been witnessed in the market. The next question is whether you want to enter at this price. I would say let the market settle, let the dust settle. Correction, or say here 10%, 12% from here on looks very much possibility. To put it in numbers, I would say gold in dollar terms, at present, it is close to around $4,800 per ounce mark. There is a possibility of further 10% correction from here on, and support zone levels for gold stands at around 4,300 mark. As far as silver goes, at present, it stands at around $75, $77 per ounce. The possibility of it heading lower towards around $72, $71 per mark looks very much likely.
Absolutely, and that just about sums up a couple of questions that I also had. But, talking about the comeback right now when it comes to this entire script, 1 week ago, you couldn't have possibly predicted the kind of moves that we're seeing right now. But, in the near term, are you seeing a comeback that you're penciling in right now?
I think the most used word at this point in time is fear of missing out, commonly FOMO. That is a major used word now. And that was one thing which led investors to continuously accumulate even at higher prices. But then this was unprecedented. Nobody could have foreseen this. But yes, there was froth building up, and forced liquidation is what has happened, which has led to this significant correction in both the precious metal. But one thing is for sure, it has given opportunity for those who have missed the rally before. And there's no difference in the fundamental factors at play. It is just a forced liquidation that has happened. I think slowly and steadily markets will stabilize, and you will again see probable higher highs in the coming months.
Mr. Malia, would you be calling it still betting on the FOMO rally if people were going to join in right now?
I would take a pause for the time being, and will wait for the market and the dust to settle before entering this particular fear and panic driven sentiment fall down. So I would wait for the time being, take a pause, reassess, and then wait for markets to stabilize.
Levels that you could help investors out in terms of something that you see as a key support level or key resistance level. If not levels, then are you looking at a particular time period where you think the dust is going to be settling in?
I think for the next 15 days, I think you'll have to wait and watch because margins have increased not only in India but across exchanges wherein gold and silver are traded. So you'll have to fare this out for the time being. Let's wait for at least 15 days more and then probably take a call on fresh entries. So in specific rupee terms, I would say 2,20,000 for silver is probable base zone wherein you can see some entry points. 2,20,000, 2,30,000 is where probably you can see entry points. And as far as gold is concerned, I think it's already corrected towards 1,35,000, 1,39,000. I think probable zone would to enter would be around 1,20,000, 1,15,000 mark.
All right, and that's something that we're looking at in terms of the key levels as well. But some of this, do you think, and you've also alluded to it, but is some of this actually CME margin hike related volatility? How are you seeing that entire piece of the puzzle also playing in right now?
I think it is mandatory for exchanges whenever there is volatility to increase margins. So yes, that is one part wherein margin calls would have led to forced liquidation. Yes, but then there are other factors at play. As I mentioned before, there's a disconnect between paper and physical market. There's always possible independence of the central bank in question, and you're also looking at overcrowded and overbought conditions, which led to again forced liquidation and thin liquidity situation.
All right, then, and very quickly before we let you go, one-word answer, if you will, between gold and silver, which is the one that you're going to be picking in on the back of safe haven allure, good fundamentals after the dust settles in, say, about 15 days, as per you, which one would you be hoping for increases from your on?
I think that's a difficult question to answer, but yes, if I would want a stability in my portfolio, I would probably pick more of gold in comparison to silver. Say if I would say 100, if I would to put 100 rupees, I would probably put 17 gold and 13 silver.